How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. This video is going to mainly talk about all the successful Asian session models that we had for the month of January. It was only a handful of them. However, there are some trade ideas that I want to talk about and highlight because they gave great unrealized gains. So, for those that are new to the model, let's simply walk through it together. So, what it is, you're taking the stance of being a turtle soup trader or a trader that's looking for a reversal after breaking one side of a consolidation or a sell side or buy side zone. So, how I like to frame it is very objective and time based. So, we're looking from 12 p.m. to 8 p.m. This is going to be our New York lunch. So 12 to 8 p.m. We're going to be trading Asian session. I start my kill zone at 8 o'clock. I know some folks start theirs at 7. I like to start mine at 8 p.m. all the way ending at 12 a.m. I'm going to be looking for buy side and sell side via swing lows or sometimes the highest high or lowest low of that session. So this is our buy side. This is our sell side. And we can mark off every level because they can be projections potentially. So this is what I would normally be doing before trading my idea. It says you're on a roll. I appreciate it. This is how I like to frame it. We got our opening price here. This is our opening price. So it tells us whether the price is in a premium or discount. So we just leave that here quickly and say that's the Asian Open. So we're not trying to predict if it's going to run up or run down. We want to go after it causes some type of break. So let's see what happens. So price runs buy side. So if price runs the buy side here, I'm simply going to take the stance on wanting price to revert back down to sell side because there's sell side liquidity or orders residing there, right? There's sell stops there. So we want to see price target sell stops after rating the buy stop. So we're between this swing high and this swing low. So as soon as it breaks that 15-minute swing high, I go onto the 1 minute time frame and I'm stalking the setup. Now, no matter how high it runs up higher, right? Sometimes it could run higher. I'm simply going to stalk the entry until it forms because it can continue to run out these buy stops and not provide the entry. But at some point, it will form. So you got to be watching the market. So here, if you take a look, this is a swing low that is inside that fair value gap. Take a look at it closely. For those that might not see too well, zoom in. There's that fair value gap. Right, there's even a little volume imbalance too, and there's a swing low. 1, 2, 3. Price runs that swing low, so we're going short as soon as price hits that area of interest. So institutional order flow entry drill, right? This is how we get new traders to understand, right? This is how new traders are not fearful of entering the market. Where should I go short? Well, right there at the premium. Sorry, correction. The discount, the bottom side of that fair value gap. We don't know how far into that fair value gap it's going to fill, whether it's going to be consequent encroachment, right, the midway point, or if it's going to be, you know, the premium side of it. Who knows? But that's where we're looking to go short, and we're looking for price to go down. So we're simply looking for a turtle soup or a reversal to that sell side liquidity pool, or the target 15 pips to the downside. So this is a 1-to-1 scenario, and you can see it hits it. It runs right into Asian Open as well. So we found a premium sell opportunity right above Asian Open. Anything above Asian Open is a premium. So from a seller standpoint, that's very ideal. Now, many traders may look and say, "Well, what about this sell idea here?" Right? We didn't get a high, this entry was a lot better, or whatever entry could have been formulated here or speculated was a lot better. We know that, and there's at times where we use a stop loss. That's the whole point. We don't know if our entry is going to give us little to no drawdown, and it did for some point until pulling us into drawdown. What I like to recommend though for the trade idea is once you get 10 pips into your trade, you take 80% off the trade. You can move the stop loss to break even, or you could keep your original stop loss and hold for unrealized gains. So we'll talk about all the successful Asian session models. So we'll just play this out so you can see how the kill zone finish. So that's how Thursday played out. And sometimes it can go on more than just 15 pips or whatever that desired TP is. So you can see it definitely goes down a little more. So this gave us about, I think, a 2-to-1 idea. So right around here, that's pretty much almost about 30 pips, right? So give a 2-to-1 in unrealized gains. So max potential before potentially coming up and hitting the stop loss. So I think it goes back up at some point and there hits that stop loss again. Does it even hit the stop loss? It doesn't. It actually runs a little lower before hitting the stop loss. So you can see sometimes that one setup can continue trading on if you don't have a trailing stop. Trailing stops, high probability of getting knocked out. So let's move on to another successful trading idea. So the next successful Asian model was Tuesday the 7th. So that night gave a successful trade idea. So let's take a look at it. So we have a swing low here. We have a swing high here. That's that range that we're trading in. And we can mark off all the other levels as well, but it's not really necessary. But for the video's sake, I'm just going to show you how it would look if you were setting this up. So you have an idea of projections or draw on liquidity. We have the opening price, which is up here. It's Asian open. We'll play it forward. Again, we're not predicting which side it's going to break. We're not trying to trade towards the break. What you could do if you were going to counter this model, you could look for a breakout idea. So if it breaks the 15-minute swing high, you look for a retest go long. If it breaks the 15-minute swing low, you look for a retest go short. That's the counter model to the idea that I'm telling you here. So you're taking the stance of being a breakout trader, while I'm taking the stance of being a reversal or a turtle suit trader. So it runs buy side here. We're looking for a short idea. Again, that short is going to form above Asian open. It's going to form above that black line, that dashed line, Asian open, and it has to be a fair value gap that runs to a swing low. And there it is. So if you look closely, look very closely, the entry is always going to look the same over and over again. So that's your swing point that's inside that fair value gap. Do you see that there? Look at that. That's that swing low. 1, 2, 3, fair value gap through it. That's all we're looking for. Now, sometimes some people may ask, well, what about the other confluence that you talk about in New York and London model, right? Triple confluence or double confluence. Can price also be above the daily opening price for 2-day range? Yes. Midnight opening price. And could it also be above the weekly opening price? Yes. And could it also be above the kill zones opening price? Yes. It could give you a extreme premium condition or an extreme discount condition and could possibly lead for better setups or more successful setups. So let's play this forward. Pose this into some drawdown. And we'll play it all the way through and see what happens. Does it hit the stop loss or does it hit the TP? Who knows? So the fact that we took the trade that formed above the Asian Open was very ideal for the sell setup. So that was nice. That was very successful. So we got our 15 pips, right? Let's say you're risking 1%. Very simple numbers. You got a 10K account. 1% of 10K is $100. So if you won this trade, you won $100. If you do this 2 times out of the week, you won $200. 3 times out of the week, you won $300. And at times, things do fluctuate, and there are other variables. Things do continue to trend on larger than you anticipate, which is why I tend to say on certain days you'll see great trending environments. So this is that Tuesday night going into Wednesday night. We got 15 pips. Does it continue to give us more than 15 pips? Let's see. And it hit stop loss. So it gives just a little more than 15 pips. Nothing outstanding. Let's just say somewhere around here. It give us about 25 pips, you would say, in unrealized gains, a little extra, right? Full potential before hitting stop loss. Let's move on to another winning day. So the next winning day for the model was Wednesday the 20th. So we're just going to set that up for you guys here. Again, we're not looking to trade in any of these gray zones, especially the New York lunch. This area tends to have consolidation. I just think you could focus your more time into things that are a lot more efficient for you, where entities in the market would be most likely trading or orders are more likely to be triggered and ran. So we got swing low there. We got a swing low here. So this is the current range that price is trading at. We can't take any unbroken. We can't take any broken, swing lows and swing highs. So we can't take this one. It's already been broken. We can't label that. There's no buy stop there anymore. It's been rated. Any stops that were just above that high has been rated. So we got that level here. Same thing down here. We can't take this swing low because it's already been broken here. We can't take that one. So let's play it forward and see what happens. So price, instead of running, you see it opened here, so close to this buy side. Some people might even anticipate it's so up here. It's more than likely going to run up here. We never know. It could have possibly ran into this and ran back up higher right away, but it didn't. It broke down and it took out this sell side liquidity pool, this swing low. So on that swing low, we go down to the 1 minute. Now we're simply looking for the inverse idea. So we're looking for a revert back to buy side because it purged sell side. So we're looking for that same entry. All we're looking for is a fair value gap that runs through a swing high. And it drops even lower. And we like that it's dropping lower because that's great, because we can still have a better buying opportunity because it's getting cheaper and cheaper and cheaper. And there goes the entry right here. Sometimes it happens very early in the session. Sometimes it happens at the very last hour of the session, final minutes of the kill zone. So you got to be attentive if this is something you want to do. Set alerts, pay attention to what's going on in price when those alerts go off, and understand the sequence of the model and what you're looking for. So we're looking for that 1-to-1. Again, it's 15 pips for 15 pips. So you want to change that and use different variables, you can as well. Just risk properly and manage that. So you can see that's 15 for 15. Play it forward. You just pause it here. I want to get this measurement tool here ready. Play it forward. And you can see 15 pips was hit. So that was a winning trade that day. And then we speed it up. Let's see. Does it return back to that original stop loss at all? Or does it continue trending more than what we exceeded it for? And it does. Look how high it's running. It's running pretty high. All right, already pushing about 90 pips. About 100 pips now. We'll play it out just to see how it plays. Let's go in a 15-minute time frame to save some time. And this thing continued to trend on. We'll go back to other Asian sessions that are successful, but I just wanted to show you guys that sometimes one idea can lead on to more than what you're looking to anticipate. And that's that Tuesday. Correction, that's that Monday, the 20th. That thing traded so high before coming back down and hitting that stop loss. And it did there, hit that stop loss down there. But this went on for 100 and about 75 pips. Yeah, that's pretty impressive, honestly, if you ask me. Now, is this going to happen every single day? No. But as we start to quantify and analyze the data, maybe we're able to find scenarios where it's best to take these trade ideas, not move our stop loss and trail it, because we know if we start to trail our stop loss below clean lows or swing lows or below inefficiencies, there's a chance that price may rate it. So this was an outstanding trade idea. That's Monday, the 20th, January 2025. So if you want to go back and look at that day and follow the steps, you can see how that one trade idea potentially gave you a lot more than what you were bargaining for. So talk about 1-to-1 to pretty much exponential growth, you know? Let's look at the next kill zone. So we're looking at Tuesday, the 21st. All right, we're looking at only all the winners. So 12 to 8 p.m. Again, look at that consolidation. Why would you want to trade that? I don't see why you would want to, unless you're already in a pending trade prior in a different kill zone and you're holding it on for more gains to potentially trend in that direction, then so be it. But if not, don't take a trade in that kill zone. I don't think it's worth your while, no matter how sweet the setup may look. You got to have discipline. You got to have some rules. It's our opening price, right? Asian open. And we're going to see what happens. This price run a swing high or a swing low. And we're going to go opposite to whatever it breaks. Play it forward. It runs buy side. It runs all the levels of buy side, right? Runs that 15-minute swing high. But as soon as it breaks that first level, the closest one that price is trading in within that range, then we start stalking. We don't care if it continues to run any other levels of buy side. It's not supposed to turn around right there on that break. We can't control the price action or the market, allow it to do what it has to do. So it breaks it there. So now we're looking for the entry moving forward from here now. So let's see what we get. Continues to run up higher. Let's move it up. Still trading higher. Still nothing yet. Market moves sideways again, and it looks like we got an entry here. Let me just double check. Absolutely. Take a look at it. Do you see how that swing low? One, two, three. It's a lower low between two candles. That swing low is inside that fair value gap. It's not at the premium side or the discount side. That's the one I want to take. I want to see price return back into it and give me that entry. Now, sometimes that entry may not be filled inside the kill zone, but this year I'm allowing it to be filled outside of the kill zone. Once the entry forms in the kill zone, I'll take it even if price returns back into that order that we set. So we'll trade this out and see what happens. So that's that fair value gap. So kill zones ends and trades back into that fair value gap. So that's where we were looking to go short. So right into that position. So when did we go short? We went right after midnight or just prior to London Open, going into 1 a.m. pretty much. I know some people like to start their London session at 1. I personally like to start mine at 2. So that's that 1 to 1, 15 pips, and it was successful. It was a nice trade idea. Now, does this Tuesday trade idea continue to trade on into Tuesday's London and New York model? Let's see. Does it give us more? No, it stops us out. So we weren't able to get as much as those other trade ideas that went on for hundreds of pips. But it definitely gave us 15 pips. And just to check the status of that, it was here. Before getting stopped out, the lowest point it went was 20 pips. So good to see. Not bad. I'm happy with that. Let's move on to the next winning trade. 12 to 8 midnight. At 8 o'clock, it runs down and takes out this swing low. It sweeps it right at 8 o'clock. So I'm considering that a break on sell side. Take a look at that closely. Right at 8 o'clock, the 8 p.m. candle, Asian Open, runs out, takes out that sell side immediately. So that's my purge. So that means I'm going to be looking for a revert back to buy side liquidity pool. So we got buy side here. You got one here. You got all these levels, right? All these could be levels of projections. That's that buy side liquidity pool here. Another one up here. All the swing highs potentially have stops above it. And they most likely do. I think this one is just equal highs or just, yeah, it's right there. Relatively equal high. All these are relatively equal highs. Market is pretty much range bound. It breaks sell side. We go down to the 1 minute. We're looking for that long below Asian Open. We have to be looking for that long below Asian Open. We don't want to buy in a premium. It doesn't make sense. We want to buy in a discount. Let's play it forward. And the entry forms very early in this session here. Takes no time at all. And I like that because it's more convenient. You know, you get back to the things that really matter in the world, you know, family, kids, your girlfriend, husband, you know, whatever it is. You get back to what really matters. Trading does take a lot of time away from people, I think. So if you can come to a means of a model and integrate it into your lifestyle so you can make time for the things that really matter in life, then things will be a lot smoother. But these are just gems that the market gives away. When it gives you the entry right away, we just started the session. I love that. Press play. We're going long. You got 10 pips, TP hit, and this thing smashes all the buy side liquidity pools pretty much, I think. And if we keep that original stop loss instead of scaling up and moving our stop loss below clean lows or below inefficiencies, we probably have a greater chance, right? Obviously, the stop loss is still original, right? It's hard stop. We don't move it. We have a greater chance for upside potential. And this thing continues to trend. Takes out every buy side liquidity pool just based on that simple turtle soup idea. That was amazing to see. That was absolutely a great trade. And I believe after that, we have one more trade that's a winner for the month. I think it's Tuesday the 28th. So we'll play that forward. But I just want to see the potential of what this trade idea was. Let's go back on the 1 minute real quick. We'll measure this up. This entry was here. This thing moved. And that was what is that, a Wednesday night? Yeah, it's a Wednesday night. Let's play it forward. It hits our stop loss. So max reward potentially 41 pips. So pushing almost 2.5 to 1, right? Not a 3 to 1, but it's close. So that was a nice idea. So we got, again, 8 p.m. to midnight. That's all we're looking to trade. We don't want to trade anything prior. Price runs out that buy side, going a little faster here, right? That's that buy side. We have a sell side liquidity pool here. And we have ones that are lower than it too. You can see that one's here, that one's here. There's one down there as well. We're above the Asian Open. This is the Asian Open here. On the 1 minute time frame, we're looking for that fair value gap to the downside, running through a swing low. And I think it forms very fast too again. It's right here. Price runs that buy side liquidity pool on the 15-minute chart, creates a fair value gap to the downside that runs through that swing low. I love it. Absolutely love it. Very simple to remember, very objective measures and means. There's no need to be confused. Now, I'm not saying this trade idea is always going to be guaranteed every single day. As we can see, it's not, because we're jumping around day to days. Any other days for the month that we didn't go over was a losing trade. So there's a lot of losers, honestly. I think this month, this trade idea was pretty much 40% win rate. And there we go. Nice sell. So we sold again above 8 p.m. opening price. And I think the Feds had, not the Feds, correction, a different bank, Bank of Japan, I think had the interest rate decision. They hiked it, which led to strength to the yen. And we saw volume injection. So we run out buy stops and then yen rallied and dollar dropped. So right there, boom. And I think it just knocks us out with spread probably. Just hits it by the pip. And then you double check. Yep. I think the high, wait, this trade idea is here. It's a 1-to-1 scenario. Stop loss is 156,416, and the high of this candle comes in right at that. Look at the high, H right there. The high of this candle is 156.416, exactly what our stop loss is. Very interesting to see, but if it didn't hit that stop loss, I think this would have been a banger too. Yeah, this was a nice banger. This would have dropped because yen pretty much gained a lot of strength. That was amazing. I think just dropped all the way down. Let's move on to another winning trade idea for the month. So we got the Tuesday, the 28th. So look at there. I think this is the final one for the month that was successful. So I believe it was 6 or 7 successful trades for the month out of, I think, 15. So it was about a 30% win rate, 40% win rate. Wasn't pretty high, but could you still manage the losses? Yes. If you have great risk protocol, you definitely can still come up on top if you're managing that risk. So not that you're going to risk 1% every time. You got to cut that risk. Let's go on the 15-minute chart. Okay. So you can see immediately at 8 o'clock, it runs out that swing high immediately. So there's a purge already on buy stops. We want to see a revert back down to this sell side, and any other level potentially lower could be a draw. We got the opening price, kill zone's open. Anything above it, it's a premium. So since it raised buy side and it's above the kill zone, we have an ideal sell opportunity. Not guaranteed, but it's something that you should look for. We can see the entries right here. Take a look at that. You see that? Boom. And boom. That's that swing low. That's ran through with speed to the downside, fair value gap. We're going short again right here. Institutional order floor entry drill. 1-to-1 scenario. All right, we're looking for 15 pips. 15 ticks. Let's go. Play it. Hits it. Pulls us into some drawdown, which is why we have a stop loss. Other things may come into trading IQ and it just melts. Just melts. Thing just melts down. And we go on the 5-minute chart. Actually, we'll speed it up. Go on the 15-minute chart. And we want to see how far this thing goes. All right, we're measuring it. We want to see how far this thing actually goes without hitting that original stop loss. This thing drops hundreds of pips. And this is where we are currently in time. So that Tuesday Asian session idea gave us about 190 pips of unrealized gains. Max reward so far, or the lowest point or highest profit has gone in pips is 189.3, which is crazy. It's currently still open. If we haven't moved our stop loss or trailed it, it didn't hit that original stop loss up there. So hopefully you guys found this insightful. Again, there is power into some of these setups for sure. Not everything is going to be absolutely guaranteed. You see that trade idea right over there. Scrunch it up a little bit. Can't do it on that one. It's on the 5-minute. There you go. So it never got back to that original stop loss, which is right around here, up here, which is cool to see. So certain days of week, you can see it definitely performs a lot stronger than others and tends to trend on into a couple days. So be aware that your day trade can be cut short because you don't think it's going to continue running on. So keep that in mind. Hopefully, you guys found this insightful. Peace.